Welcome, Mish. I have a topic for today. First of all, I read your daily and totally agree with you on the SMH analysis and the tech analysis, but we're not going to talk about tech, which I'm sure you won't mind. And then you did a great interview with Maggie Lake, and you kind of covered this theme. But with the huge blackout in Europe today, I don't know how we can't put a little bit of focus on energy and some ideas in energy because you're already on this. So, how does energy sound to you? Is today's topic?
It sounds great and very timely. And also considering that every week when we do these podcasts, what we're really trying to do is bring to the attention of people where the opportunities are on things that provide very little risk as opposed to the catch the falling knife, hoping that it rallies kind of scenario. And energy has been kind of an ignored space for a long time. Although last year you heard a ton about how much energy is going to be required to run these data centers. And then it seemed like everybody just focused, of course, on the semiconductor stocks and the tech stocks themselves and forgot about things run on things, things that move things that make things. These have been the themes that I've been on and you've been on for a couple of years. So what happened today in Europe, by the way, so Spain, Portugal, parts of France had a complete shutdown in terms of power, nothing. And that really caught them off guard, number one. But number two is stories went from cybersecurity attacks to some kind of a solar thing that happened to what probably happened, which is kind of like the Texas thing, which is the power grid just got overloaded. So that happened after we'd already been talking about energy. So we thought for today, I keep trying to keep people's eyes away from trying to figure out where the bottom is in NVIDIA or Google or Apple or any of those, and rather look at what is obvious to us right now. And that's why we're going to talk about energy. And what you have up there right now is XLU. And I know you and I have talked about this as a great example of calendar ranges.
Yeah, and this is also one of the sectors we talked about in our Wednesday mentoring as being one of the ones that looks the best. And it was a sneaky sector that really pulled the market out of last summer's doldrums, and it looks set up to potentially do it again if we can get a little bit more on the upside.
Well, it has every
But
setup that you and I love, pretty much, except for one. We'll talk about that. But it's interesting because XLU is, in my book, I said if Uncle Youth shows up at the door drunk, pay attention. But we had a departure from that last year because utilities were driving the market, as you just said, because of the fact of the energy demands. And how does energy get from point A to point B is through utilities, right? So yeah, it's interesting to me. So let's look at the chart more currently. While the market crashed, and certainly this took a little bit of a tumble in the early part of April, it did, however, hold the 6-month calendar range low.
which not many things did.
Yeah, right. It did have a pretty decent looking reversal pattern in that it had made a new low on that famous April 9th. And then the next day, it kind of had an inside day, not perfect, but then the day after that, it kind of had some follow through to the upside. It's now above the 200, above the 50, and above the 6-month calendar range high, right?
Yeah,
So that there's two slight negatives here. Number one is it's still underperforming the leadership indicator
yeah, it's dipped
SPY.
down a little here with the rally.
And number two is the momentum is still negative in that this is already in a bullish phase and we're still in a bearish phase in the momentum, in the dots being under the 50 and the 50 being under the 200. If you look at the
Yeah, yeah, we have a divergence here still too. So one way to look at this, or that I look at this, is we want these dots to come over the 50-day moving average with the price over the 50-day moving average. This thing getting over the 50-day moving average really involves taking out this. So
Yeah.
if we can get over 80 and this can get over the dots and this can come back, then that's a good breakout. And if it breaks out and you don't get those things happening at the same time, then that's not a breakout. That is,
A
I'd be,
fake out.
well, it's likely to be a fake out, right? And certainly if it turns around on you, then get out of the way quickly. Um, but it's been stronger when the market was down, and it just hasn't broken out yet. And this thing isn't going to turn into a tech stock. But to the point of our conversation, this is indicative of a lot of interesting things under the energy surface, which I think is what we want to dive into now.
Yeah, we're not really advocating that you go out and buy utilities, but considering the connection to the energy, it's certainly a compelling thing to look at.
Yeah, the sector is stable, right? That's why we started here.
Right. So let's look at uranium.
Speaking of stable.
So uranium, I always love to tell the story because people have asked me on pretty much every interview that I do, not like on mainstream media interviews, but when I do interviews like Real Vision or with Maggie Lake, like I did today, where there's more of a conversation and people can ask questions. Bar none, people have asked me about uranium. No matter what the condition is, people ask me about uranium. So there are people really interested in this sector. And my answer is always the same. I lose money in this every time I trade it, which is true, but I realize why. I was always buying strength, and this is not a stock. This is like a commodity, right? This has not been a good thing to buy on strength. So when it recently made its new low, what are we looking at? Oh, same thing. Okay.
Yeah, I'm just trying to get a longer term view. Sorry.
Right.
The
So
low
like,
down at 20.
yeah, look at like what happened. Yeah, look at what happened. I didn't buy it this year because I got burnt out on it. But if we look at 2024, I mean, it looked like it was going to freaking explode.
Yeah.
At the 50, I stayed with it. I wasn't going to get out. I didn't even stop myself out when it sold off because I looked at the calendar range low. Then it went back. Then it took out the calendar range high. I'm like, oh my God, I'm finally going to make money in uranium. And guess what? I didn't.
Yeah.
So now I'm like, okay, there's been a lot of stories about clean energy, nuclear energy, major tech companies looking at it, the demands of AI, that nuclear energy would be such a wonderful solution to a lot of our energy problems and a lot of what the damage is done to the environment as a result. And so that's why I've been paying attention to that. In fact, I saw a story on CBS Sunday Morning about a month ago, all about uranium and all these companies paying attention and all these scientists doing all this work. So I said, you know what? I'm so tired of losing money buying strength. What if I bought some weakness? So let's go and talk about, though, I never just do that out of a whim. So can we spread that out a little bit?
Yeah, so this is the weekly chart.
Oh, this is the weekly.
So
Okay.
just to give people some perspective, it went nowhere. It's an ETF, so it's hard to know that these prices are really valid going back to 2011. But even if you discount that, it went pretty much nowhere from 2017 to 2021. Uh, and then from $10 in 21, it has rallied up to over 30. So that's a pretty sizable move. And you're looking at the 200-week moving average here in the green. And this 20 level is, basically where it broke out from in 2023 and what it got up to 32. So that's a 50% move. So it may seem boring, but it over time has had some significant moves.
And
And
boring sounds pretty good right now compared to high volatility and losing sleep because you're worried about whether the market's going to come in or 1,000 points lower or 1,000 points higher.
right.
Yeah.
So let's go to the daily. You wanted to go to daily.
Well, because I've been shopping, when we had that low, I already was shopping for things that made our, what we love, which is our classic reversal pattern. Again, new low, possibly inside day after, next day follow through with some volume on a close higher than the outside day. And this had it right at that beginning of April. So that's when I got long, by the way. And also, if you look at what happened at that pretty much same time, we were having kind of a mean reversion in the momentum, right? It was getting through the Bollinger Band, so I liked that. And I also liked that at that point, even though it was underperforming the SPY, it looked like it looked like it was about to start outperforming the SPY, which of course is what it's doing right now.
And the breakout kind of broke it out. Yeah. I mean, this pattern right here that you just described, where we had the big up day and then it follows through, I've been looking at that pattern too. There's a lot of stuff that has not done that, and the SPYs, for one, are still kind of struggling with that. So this
Yeah,
is,
and none of the tech stocks, I should say none, but most of them haven't done that either, by the way.
yeah,
Yeah, so that's why my feeling is, after looking at this pattern for, 1,000 years, is that when it didn't make a very clean reversal bottom and doesn't get through the 50, generally that tells me that this is a short covering rally that could fizzle and make another new low. That's why I stay away from those formats. Like Symbotic, which is a stock I loved, it did not make a clean reversal bottom, so I stayed away from it. I don't think it did, but anyway, I don't want to digress. So now where are we at? We got through the 50 on Friday. We confirmed it today. So now we're in a legitimate, not just in the momentum, but in the price, we're in a legitimate recuperation phase. The 50 has not neutralized in slope yet, but it's starting to in momentum, and we're through it there. And it might start to in price. So, if you bought it when I did, which is once it got through that horizontal line that Geoff just drew, we paid $20.50 for it. I figured, what's my risk? The worst that'll happen is I'll get out under the low. It was so clean. I was not going to stick around for that. And instead, there's been zero pain in this trade. So the question is uranium picking up because it might be a more desirable clean energy source? Is nuclear energy around the corner? Could the fact that Iran, which we're now trying to shut down their uranium reserves because of, obviously, we don't want them to create a bomb. Is that going to make a shortage? We don't know. All I know is that it just seemed to me, with what we saw in utilities and now what we're seeing in uranium, and we'll show you a couple of other examples, maybe that was the low, or maybe it's just a pop. But regardless, always trade things the same way we always tell you to trade them. Take profits on your certain tranches and raise up your stops, and don't take a winner and turn it into a loser.
yeah. And I mean, even if you just stuck to the basics, we just showed you this is around the 200-week moving average, so that's major support. This was major support. The short-term outperformance was, the buy point that you described. The SPYs, for example, are stuck at this line in their own chart. They're trying to get through this low and this high, and they can't do it. So before we had triple play, the leadership line, this is how I would be looking at how the thing is outperforming or underperforming. So now it's easy. We just blue over red, and it's breaking out. So I mean, we can have all the fundamental reasons in the world we want, but if you wanted to buy something at long-term support that's outperforming in the short term with a phase change confirmed by real motion and leadership, that's a good picture.
Yeah. And I broke my streak. Yay. So, yeah. So now, along with the energy theme, let's put up LNG. We were talking about that before. That chart looks pretty.
Yeah, I really like this chart. Go ahead.
Well, let's go back to that, famous April situation where it made a new 60-plus day low on April 9th. And then the next day opened up and closed higher. I think it closed higher. It's hard to tell.
Well, on this one, it did close higher, but this closes on it closed higher than the prior close. Yes, down on the day,
But
down
higher
from
than,
the open, higher than the close.
right. And
Then you had this day, which is your big day that you've been using.
right. So now you have the 200-day moving average held. You're back over the 6-month calendar range. You can see it's starting to outperform in the leadership against the SPY. And even though it took a while for it to take out its moving averages on momentum, you could see there was that mean reversion at the same time, just like we saw with uranium, right?
Yeah.
So now we're in a bullish phase. We're not in a bullish phase in
Yeah.
momentum, but we are in a bullish phase on price. And if you draw to the top of today, go left, you can see that this was a pretty good takeout of
Yeah.
a lot of price action going back to the beginning of 2025, right?
Yeah. I'm gonna do this.
So now the thing is, it's an expensive stock, right? It's not like talking about uranium at $20 or $25. We're talking about something that's trading at like 200 and what, $40,
30,
$35?
237 close
So,
today.
there's a little bit more thinking about involved with how much to risk, but I would just pretty much say that I would not let this break down below the 50-day moving average. That's number one.
Right.
And number two is if it looks pretty good tomorrow, that could be a good trigger. And when I talk about natural gas, people always ask me about LNG. I actually was drawn to LNG after I saw the natural gas chart today. And the futures, I don't think we can show you. You don't, but 335 was a big number in the May or June contract because it had a reversal bottom, and that was right at the 200-day moving average. So let's go to UNG as our
What's the symbol for the for futures again?
NG. So it would be NGM25.
Yeah. Uh, I can, let's go to UNG here. I'll pull it up on my other screen while you're talking and then bring it
We
over.
all know that UNG is not perfect, right? It goes into contango, blah blah blah, all that stuff. Um, but nonetheless, I've done very well with UNG if you know how to pick it, the timing of it. And again, this is another one that fell all the way down to the 6-month calendar range low. So it may be cheap, but it held very key support. And yet it really, today, didn't show anything interesting to me. And today it went back over the 200-day moving average. So, this is a really good time to look at it. Plus, if you look at the momentum, there's no divergence. It got under the 200 and now it's back over the 200 if you're looking at the red dots. Of course, still well underperforming the SPY, but that's okay. We don't care about that right now. So if you put LNG, URA, and UNG together, what is the story it's telling you? That energy, which was so hot last year because of the big AI won't run on fumes, got forgotten about because everybody just so obsessed about AI and tech. Now, all of a sudden, while people aren't looking, these energy stocks and commodities are starting to say, you know what? Regardless of what happens with NVIDIA and Google and Amazon and all these other companies, Microsoft, the thing is they all going to need this to run. And this is a really good cheap buy opportunity, in my opinion.
Yeah, this looks really good. I didn't realize it was doing that. And so now I have pulled up the continuous contract here on
Good.
TradeStation.
Mm-hmm.
And I could pull up June as well, but the
That's fine.
thing
Continuous is good.
the thing that is encouraging is, and I'll pull up the other one. You can see it following the 200 here, breaking out of the 200, pulling back to the 200. This is the same look that we have here in UNG, right? They don't always fit that nicely, and now it does. So for me anyway, that's encouraging. I always get a little nervous when the future that the ETF is supposed to be tracking doesn't really look the same. This looks pretty good.
Yeah,
It looks
right,
pretty good.
right.
And this looks like it doesn't really go anywhere, but if this thing goes from 15 back up to 25, that's like that's better than a 50% move. So
Can I tell you something? In 2021, This thing, I bought it at 11. And I remember I went on Charles Payne's show and he was
Yeah,
like,
I
the
remember.
Widowmaker. Why are you buying natural gas? Mish, it's the Widowmaker. And I'm like, because, when we start revving up again, the economies globally, there's going to be a huge demand for this. And that went from 11. I don't even have you gotten to the right year yet? Was it 2020?
Yeah, this is down here at like 31. It went up to 120.
Exactly. Exactly. So I mean, can this move? Absolutely, this can move. Can you?
Yeah, and and this is a focus of the administration from an energy perspective. So,
Yes. And
um,
the most important thing to me, on top of everything else we just said, which was important, is if it breaks down under 15, you're gone. You have a limited risk. I'm all about right now what's bottoming, limited risk, has a story that I can tell that at least makes it sound like it's smart, and then has a lot of upside if I'm right. And even if I'm only partially right, pretty obvious if it can't get through the 6-month calendar range high or the 50-day moving average, time to take some profits or get out of the trade. Say thank you very much.
if this was the place for this to turn around, this would be, I mean, if there was a place, this would be it.
Oh, that
Yeah.
quote, that should be the quote that we use for this podcast,
If
Geoff.
there was a place, this is it.
If there was a place for this to turn around, this is it. And then people can figure out what this is. They have to listen to our podcast.
So should we stop now? So it's absolutely the last line.
I think so. I think that's it.
I don't know. We might get some hate mail for that. Uh,
Nah, we should only get love mail. Look what the great stuff we've been saying. Hey, Rivian. Rivian finally got over $13 today. Yay, Rivian. So, yeah, you're going to show Rivian? I'm
yeah,
yay.
yeah.
Yeah.
It's
Rivian bottomed at 10. We just had to wait for a really long time.
yeah, that 10 level is rock solid.
Yeah, especially on April 9th when everything else made new lows. This did not break 10.
Yeah.
Mm, okay. Which, by the way, is sort of an energy play, right? Think about it. Electric car. As much as people hear politically how against everybody is with EVs and clean energy and yada, 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 never pay attention to that because clearly there are people buying this stock. There are people now buying energy stocks. There are people that are looking at these things. We're not the only people, which means that it could be because who's ever out there making these sort of decisions about our energy needs in the United States, with today, of course, the blackout, maybe even speeding it up along further, realizes that we need to look at other energy sources outside of drill, baby, drill.
Yeah, and I think that regardless of what the government's policies are, there are just enough people who, on for their own reasons, don't want to be a part of coal and fossil fuels, and they're just looking for alternatives. So the genie is out of the bottle on that one. It's going to be an interesting couple of decades ahead.
Absolutely. And I'm just so excited about it because this is our thing, right? What do I do best? I find emerging trends at their lows, and I've done it over and over and over again. And,
Yeah.
using our tools, using our charts, using my experience. And now I have something even better using my conversations with you because I have affirmation.
This Rivian really looks this looks great. Yeah, I might have to buy some of this.
Yeah, I
Put some
didn't.
UNG in the trunk.
No, by UNG too. By
Oh
UNG,
yeah, that's what I mean. Yeah,
yeah, yeah.
bring it on.
I mean, let's go energy, baby.
Yeah, I'm glad you showed me that. I was not focused on UNG at all. I'm gonna look at some options and the futures as well.
Cool.
I just don't like the ETF. It's so it just
I know,
bores me to
I know.
tears.
I understand.
But you might be able to get a crazy option play in the long term, and the futures, they'll do some damage.
Yeah.
Yeah. All right. Awesome.
All right. Great session.
All
Thank you.
right. Yeah, that was different, and uh, I like it. Thank you very much.
All right. Thank you very much.
Have a great rest of your day.
You too. Bye for now.
Bye.